Gold prices steadied on Monday, after reaching new record highs against all major currencies except the US dollar and Swiss franc and prices in number 2. Consumer India shifted to a premium for the first time in 2 months ahead of the Diwali festival season, writes Atsuko Whitehouse at BullionVault. Spot gold in US dollars climbed as high as $2,666 per ounce during early trading on Monday, $18 below the all-time high recorded on the 1st of October, before it gave up all gain to $2,653. The yellow metal in Japanese yen hit a record of 12,792 yen per gram, while Chinese gold prices jumped to a new high of 601 yuan per gram. Meanwhile, gold priced in euros reached a new high of €2,439 on Monday, while the UK gold price in British pounds also set a fresh record of £2,040 per ounce. The reality is that the rally has been driven by a combination of factors: broad-based buying across the different parts of the market combined with a lack of sellers, said Joni Treves, a gold analyst at UBS in Singapore. Year to date, gold has risen 28.3% in US dollars, 30.0% in euros, 25.1% in pounds, and a notable 35.6% in Japanese yen, as the currency weakened nearly 6% against the greenback. Treves has revised her gold price forecast upward, projecting $2,800 per ounce by the end of 2024, a $200 increase from the bank's earlier estimate, and $3,000 by the close of 2025. She highlighted such factors as anticipated US interest rate cuts, a weaker dollar, and strong demand from central banks and other official institutions, who were alarmed by the US's ability to freeze Russia's dollar assets. Gold demand in India, the number 2 bullion consumer nation, rose last week ahead of the Dussehra festival on Saturday, an occasion considered auspicious for buying gold. Physical gold dealers in India charge premiums for the first time in 2 months. It was $3 per ounce over official domestic prices, inclusive of 3% sales tax and 6% import duty, which was slashed from 15% at the end of July, after a decade of lobbying by India's bullion and jewelry industry. The premium surged as high as $20 soon after the tax cut. While gold prices have increased recently, leading to some softening in sales in the past couple of days, said Saurabh Gadgil, chairman of P&G Jewelers in India, pointing the prices reached its record high of 76,331 rupees per 10 grams early last week. Overall sentiment remains bullish, he continued. India's gold imports rose by 216% compared to the previous month, reaching 136 tons, as jewelers stocked up in anticipation of strong festive season demand. However, the import volume subsequently declined to 60 tons in September, primarily due to a significant increase in gold prices. Gold prices on the Shanghai Gold Exchange continued to show a discount to London, easing to $15 per ounce on Monday after wholesale bullion in the metal's number 1 consumer market increased the weekly average to $27 last week, signaling poor demand with the steepest disincentive to new imports since China's record COVID pandemic gold discounts of 2020. Among gold-backed ETF investment trusts, the giant GLD last week grew 0.2% to the highest since early January, while number 2 gold ETF, the IAU, expanded 0.7% for the week to be the largest size since early August. Global gold ETFs maintained their positive momentum in September, marking the 5th consecutive month of inflows. This streak has reversed the year-to-date trend, pushing global gold ETFs into positive territory with a net inflow of $389 million for the year so far. Latest data show that hedge funds and other leveraged speculators in COMEX gold futures and options cut their bullish betting on gold as a group in the week ending the 8th of October and expanded their bearish betting unchanged. Overall, That pushed the net long position of managed money traders 11% down from its all-time high of $67 billion recorded 3 weeks ago. However, it was 113% more than the end of 2023. There is 10% of unexplained gold price action given year-to-date central bank and investor, ETF plus suit flows, said Nikki Shields, head of metal strategy at Swiss refining and finance group MKS PAMP. Bears will say gold's overshot, but bulls argue there's a lot of other OTC investment buying other than central banks driving prices, and it's sticky buying. Prices for silver, primarily an industrial metal, which finds nearly 60% of its annual demand from industrial uses, fell as much as 2.2% to $30.84 Monday morning before paring a half of its loss, as China's highly anticipated announcement of financial stimulus plans on Saturday was big on intent, but stopped short of producing a headline monetary stimulus figures. China's main CSI 300 index closed 1.9% higher on Monday after a volatile session, as investors evaluated the recent announcements, recovering from its worst week since late July. European stocks were little changed on Monday, as the Pan-European Stoxx 600 dipped 0.02% as traders wait for the European Central Bank's policy meeting on Thursday. Japanese and US markets are closed today due to the holidays. Please like this video and subscribe to our channel.